Just weeks ago, crypto was booming. Bitcoin at new highs, altcoins surging, optimism everywhere. Then, almost overnight, the market crashed. Portfolios turned red, and fear replaced euphoria. This wasn't a normal dip. It was a multi-billion-dollar liquidation that wiped out leveraged traders and sent panic through the community. Now the big question, is the bull run over, or is this just a reset before the next rally? Powerful forces are pulling the market in both directions. Negative news, and ETF outflows versus institutional interest and historical Q4 strength. Let's break down what happened, why, and what it means for your crypto strategy. The last month has been a brutal reality check for crypto investors. Bitcoin plunged from $114,500 to $91,000, a 20% drop in days, triggering forced selling. Ethereum followed, dropping from $4,020 to $3,050, erasing over $1,000 per coin. Even strong fundamentals couldn't protect projects from the panic. Altcoins like Cardano and Hedera were hit even harder, both down nearly 50% year-to-date. Billions vanished from the market as investors fled risk, especially in smaller coins. When Bitcoin sneezes, the rest of the market catches a cold, and this time, it was a full-blown crisis. The risk-off sentiment was clear: safety first, risk last. Bitcoin, often called the king of cryptocurrencies, found itself under intense pressure as the market was rocked by a series of dramatic events. The crash wasn't just a random dip, it was triggered by two major catalysts that sent shockwaves through the entire crypto ecosystem: record ETF outflows and the sudden movement of a massive Bitcoin stash linked to the infamous Mt. Gox exchange. The Mt. Gox saga, which has haunted the crypto world for years, resurfaced as news broke that the trustee overseeing the exchange's bankruptcy had moved a staggering amount of Bitcoin. This move immediately sparked fears that a huge sell-off could be imminent, putting additional downward pressure on prices. Meanwhile, institutional investors weren't sitting idle. BlackRock's IBIT, one of the largest Bitcoin ETFs, saw a jaw-dropping $1.26 billion pulled out in a single session. This massive outflow signaled that big money was taking profits, possibly bracing for further volatility, or simply locking in gains after a strong run. The movement of nearly $2 billion in Bitcoin from Mt. Gox wallets sent a chill through the market. Traders and investors alike worried that if these coins hit exchanges, it could trigger a cascade of selling, overwhelming buy orders and driving prices even lower. Yet, even amid the panic and uncertainty, there are reasons for optimism. Historically, the fourth quarter has been a period of strength for Bitcoin, with many past rallies kicking off during this time. Some traders are betting that history will repeat itself, and that the current turmoil is just a temporary setback. Another positive sign is the high level of stablecoin reserves sitting on exchanges. This means that there's plenty of dry powder on the sidelines, capital that could quickly flow back into Bitcoin and other cryptocurrencies if sentiment shifts. Many savvy traders are watching closely, waiting for the perfect moment to buy the dip. They believe that once the panic subsides, a strong rebound could follow, rewarding those with patience and conviction. All eyes are now on the key support level at $89,000. If Bitcoin can hold above this crucial line, it could signal that the worst is over and set the stage for a recovery. However, if this support fails, the market could see further declines, shaking out even more weak hands and testing the resolve of long-term holders. Ultimately, this is a classic shakeout, a moment designed to scare out the weak hands before the next big move. For those who can weather the storm, the coming days could offer both risk and opportunity in equal measure. Ethereum's fall below $3,000 was a blow to market confidence and DeFi projects. Over-leveraged traders were wiped out, but the long-term case for ETH remains strong. Ethereum ETFs have attracted billions, showing deep institutional interest. The Pectra upgrade improved scalability and lowered fees, strengthening ETH's fundamentals. If the market recovers, Ethereum could rebound sharply, especially with ETF inflows and tech upgrades. But if $3,000 fails as support, lower levels could be tested. Cardano and Hedera have been crushed, both down nearly 50% this year. Even positive news, like ETF filings, couldn't stop the slide as the SEC's review was delayed by the government shutdown. Without ETF approvals, these coins are stuck in limbo, waiting for a catalyst. Their recovery depends on a broader market turnaround and regulatory clarity. For now, capital is fleeing altcoins for safer assets. ADA and HBAR are in a holding pattern, hoping for the storm to pass. The crash was a perfect storm. Institutional outflows, Mt. Gox's Bitcoin movements, and a major Cloudflare outage. BlackRock's ETF outflows shook confidence, while Mt. Gox's $2 billion Bitcoin transfer triggered panic selling. The Cloudflare outage took down exchanges and data providers, amplifying fear as traders lost access during the drop. FUD spread fast, and traders sold preemptively. The ongoing U.S. government shutdown delayed ETF reviews for altcoins, removing a key catalyst. With no positive narrative, sentiment turned negative fast. The market was left vulnerable, with no clear short-term driver for growth. Extreme fear often creates the best buying opportunities in crypto. When the market is gripped by panic and uncertainty, it's easy to lose sight of the bigger picture. But history shows that moments of widespread fear and capitulation have often marked the bottom of major cycles. The greatest investors know that when everyone else is running for the exits, it's time to start paying attention. Billions in stablecoins are sitting on the sidelines, ready to buy the dip. This massive pool of liquidity is like dry powder, waiting for the right moment to re-enter the market. It signals that investors haven't given up on crypto. They're simply waiting for the right opportunity to deploy their capital. Despite ETF outflows, 2025 saw over $18 billion flow into US Bitcoin and Ethereum ETFs. This influx of institutional money is a strong vote of confidence in the long-term potential of digital assets, even as short-term volatility shakes out weaker hands. Analysts believe this sell-off cleared excess leverage, setting up for a strong year-end rally. By removing speculative froth, the market is now healthier and more resilient, with a stronger foundation for sustainable growth. Corrections are normal in bull markets. They shake out weak hands and reset sentiment. These pullbacks are not a sign of weakness, but a necessary part of every healthy market cycle. They offer disciplined investors a chance to accumulate at lower prices, while others are paralyzed by fear. The Bitcoin halving supply shock is just starting to kick in, historically a major catalyst. Each halving reduces the new supply of Bitcoin entering the market, creating scarcity that has fueled previous bull runs. We're entering the window where reduced supply meets renewed demand. This rare alignment has historically led to explosive price action, as buyers compete for a shrinking pool of available coins. This could be the last big correction before the real post-halving rally. For those with patience and conviction, this moment may be remembered as a generational buying opportunity, one that rewards those who act when others are afraid. But there are real risks this time. The bull run may have been front-run by ETF hype, leaving few new catalysts. Bitcoin miners are under pressure, with hash price at a 5-year low and rising costs. If miners sell to cover expenses, it could add sustained selling pressure. Macroeconomic headwinds, like sticky inflation and high rates, limit new liquidity for crypto. The looming Mt. Gox distribution could flood the market with billions in Bitcoin, extending the correction. Even a fraction sold could overwhelm buyers and prolong the downturn. So, what's next for crypto over the next 6 months? After a period of intense volatility and rapid price swings, the market is now at a crossroads. Investors, traders, and even casual observers are all asking the same question: where do we go from here? The answer isn't simple, but by looking at key trends, upcoming events, and the broader economic landscape, we can start to piece together a roadmap for what's ahead. For Bitcoin, the next few months are likely to be defined by a period of consolidation, with prices expected to range between $90,000 and $100,000. This phase is crucial, as it allows the market to absorb recent gains and shake out weak hands. As ETF inflows gradually return, and the effects of the recent halving become more pronounced, we could see renewed momentum building for the world's largest cryptocurrency. Looking further ahead, the 6-month target for Bitcoin sits between $120,000 and $140,000. If institutional interest continues to grow, and macroeconomic conditions remain favorable, Bitcoin could break through previous all-time highs, setting new records and drawing even more attention from mainstream investors. Ethereum, meanwhile, is poised to outperform once the broader market begins to recover. The upcoming launch of Ethereum ETFs and the highly anticipated Pectra upgrade are set to be major catalysts. These developments could drive significant inflows and boost confidence in Ethereum's long-term potential, especially as the network continues to evolve and scale. After finding support and bottoming out near $3,000, ETH could stage a strong rally, with price targets in the $4,500 to $5,500 range. This would represent a significant recovery and could set the stage for further gains as adoption grows and new use cases emerge. For Cardano and Hedera, the outlook is more uncertain. Their performance will largely depend on whether ETF approvals come through and if the overall market sentiment turns positive. Both projects have strong communities and innovative technology, but they need a favorable regulatory environment and renewed investor interest to truly shine. If ETF approvals are granted, ADA could climb to 0.75-0.90, while HBAR might reach 0.25-0.35. These targets reflect the potential for significant upside, but also underscore the importance of external factors in driving price action for these altcoins. Without the tailwind of ETF approvals, however, both ADA and HBAR are likely to lag behind their peers. The message for investors is clear. Approach with cautious optimism, and be prepared for a bumpy ride as the market continues to evolve. This recent correction, while painful for many, has actually cleared out much of the excess speculation and created new opportunities for those willing to look beyond the short-term noise. It's a chance to reset, refocus, and position for the next phase of growth. The key drivers going forward remain the same: increasing institutional adoption, ongoing technological upgrades, and the lasting impact of the Bitcoin halving. These factors are laying the groundwork for a more mature and resilient crypto market. Volatility will always be part of the crypto landscape, but for those who can weather the ups and downs, the long-term outlook remains bright. Staying focused on fundamentals and maintaining a disciplined approach will be key to navigating the road ahead. Don't let short-term panic or market noise distract you from the bigger picture. The crypto revolution is still unfolding, and those who stay the course could be well rewarded in the years to come. Ready to uncover the altcoins that could explode by 2026. While Bitcoin grabs the spotlight, the real game changers are often found in the altcoin market. These projects are redefining what blockchain can do, and if you spot the right ones early, the upside is massive. This isn't about hype or quick flips, it's about finding the foundational tech of tomorrow. I'll break down 5 altcoins I'm watching, explain what makes them unique, and why they could be major players by 2026. Remember, this isn't financial advice. Crypto is risky, so do your own research. Let's dive in. First up, let's talk about the king of altcoins, Ethereum. It's the second largest cryptocurrency by market cap, and for good reason. Sure, it's not a hidden gem, but its story is far from over. In fact, Ethereum's journey is just entering a new chapter, with innovation and adoption accelerating at a pace we've never seen before. Ethereum pioneered smart contracts, which are self-executing agreements that run on the blockchain. This breakthrough unlocked entire new industries: DeFi, NFTs, DAOs, and countless decentralized applications that have changed how we think about finance, art, and governance. Its network effect is unmatched. Developers and users flock to Ethereum, reinforcing its dominance. Every new project, every new user, makes the ecosystem stronger and more valuable. For years, high fees and slow speeds were a problem, making Ethereum difficult to use for everyday transactions. But that's changing fast, thanks to a wave of upgrades and new technologies. The merge was a historic upgrade, shifting Ethereum from energy-hungry proof of work to eco-friendly proof of stake. This slashed energy use by over 99%, making Ethereum far more sustainable and attracting serious institutional interest. Layer 2 solutions like Arbitrum, Optimism, and Polygon now handle transactions off-chain, making Ethereum faster and cheaper. These scaling solutions are unlocking new possibilities for mainstream adoption. The Dencun upgrade and proto-danksharding are driving costs down even further, making microtransactions and new business models viable for the first time. Imagine using Ethereum apps as easily as any web app, but with all the benefits of decentralization, privacy, security, and true ownership of your assets. Institutions are taking notice. BlackRock, Fidelity, and other financial giants are launching Ethereum ETFs, making it easier for traditional investors to get exposure. Regulatory clarity is improving, and big money is flowing in. As governments and regulators provide clearer guidelines, confidence in Ethereum's future only grows. ETH's supply is also shrinking. EIP 1559 burns a portion of every transaction fee, making ETH potentially deflationary. This means that over time the supply of ETH could actually decrease, increasing its scarcity. So, you have rising demand, falling supply, and a maturing ecosystem. It's a powerful combination that's hard to ignore. Ethereum isn't just another altcoin, it's the backbone of Web3, powering everything from decentralized finance to digital identity and beyond. Its developer community is massive, with thousands of contributors worldwide. Each upgrade makes Ethereum more scalable, more secure, and more deeply integrated into global finance. While new chains compete for attention, Ethereum is expanding the entire pie, growing the crypto ecosystem for everyone. It's the settlement layer for the digital economy, where value moves seamlessly and securely across borders and industries. As the crypto space grows, so does the value of Ethereum's foundation. It's the infrastructure on which the next generation of the internet is being built. By 2026, I see Ethereum as a core holding for any serious crypto investor. Its resilience and adaptability make it a must-have in any diversified portfolio. Don't sleep on the king. Ethereum's leadership is hard-earned, and its momentum is only building. The next few years could see Ethereum cement its place as the most reliable and powerful platform in crypto, setting the standard for what's possible in blockchain technology. If you're building a portfolio for the future, ETH deserves a spot. It's not just an investment, it's a stake in the future of the internet. The story isn't over, it's just getting started. Ethereum's best days may still be ahead. Let's move to the next contender. Next, let's talk Cardano and its token, ADA. Cardano is the scientific blockchain. Every upgrade is peer-reviewed and rigorously tested before launch. Founded by Charles Hoskinson, a co-founder of Ethereum, Cardano's slow and steady approach is all about security and reliability. Critics called it a ghost chain, but since smart contracts launched, its ecosystem has quietly grown. Cardano's EUTXO model brings predictable transaction fees, no more surprise gas costs. Its roadmap is clear. After decentralization and smart contracts, the focus is now on scaling and governance. The Voltaire era will introduce on-chain voting and treasury management, making Cardano truly decentralized. Sidechains and scaling upgrades aim to put Cardano on par with Visa in transaction capacity. Real-world adoption is happening, especially in developing nations, like digital IDs for millions of students in Ethiopia. Cardano's methodical approach means fewer hacks and more trust, key for governments and institutions. By 2026, Cardano could be one of the most decentralized and resilient blockchains out there. Its focus on real-world utility and community-driven governance sets it apart. If you want a project playing the long game, Cardano is worth a close look. The market may soon reward its patience and rigor. ADA's price could reflect that shift. Let's see who's next in the race. 18. If Cardano is the tortoise, Solana is the hare, built for speed. Solana's proof-of-history innovation lets it process over 65,000 transactions per second for a fraction of a penny. That's faster than Visa, and it's made Solana the go-to for high-frequency apps, trading, gaming, and social media. Yes, Solana had outages and early centralization concerns, but the team is fixing these with upgrades like FireDancer, a new validator client for more resilience and decentralization. As hardware gets cheaper and software matures, Solana's network is stabilizing. Its ecosystem is booming. Deep-in projects like Helium and HiveMapper, plus a thriving NFT and meme coin scene, are driving massive user growth. Solana Pay is even challenging legacy payment rails with instant, near-zero-fee crypto payments. Institutions are watching closely. Solana's relentless focus on performance has carved out a unique niche. By 2026, it could be the backbone for a new generation of high-speed, decentralized apps. SOL's value could soar as the network matures and adoption grows. If you want exposure to the fastest blockchain, Solana is a top contender. Let's keep moving. Imagine a future where blockchains don't compete, but collaborate, where hundreds of networks work together seamlessly. What if the next evolution of the internet isn't about a single blockchain dominating, but about many, each with its own strengths, all interconnected? That's the bold vision behind Polkadot. Polkadot, powered by its DOT token, is often called a blockchain of blockchains. It's designed to connect specialized blockchains, called parachains, so they can interoperate securely, share information, and transfer assets without friction. Think of it like the European Union for blockchains. Each parachain is sovereign, able to set its own rules and innovate independently, but they all benefit from shared security and communication through the Polkadot relay chain. This structure encourages diversity and experimentation, while maintaining a strong, unified foundation. This approach solves the fragmentation problem that plagues many blockchains today. Moving assets or data between chains becomes seamless, trustless, and efficient. No more isolated silos or complicated bridges. Projects compete for parachain slots through innovative auctions, locking up DOT tokens and rallying their communities for support. Winning a slot means access to Polkadot's shared security and network effects. This pooled security model allows new projects to focus on building great products rather than spending years and resources bootstrapping their own blockchains from scratch. It's a launchpad for innovation. With Polkadot 2.0, the system is set to become even more flexible. Projects will be able to buy block space as needed, scaling up or down based on demand, making the network more dynamic and accessible. The Polkadot ecosystem is already thriving and diverse. Moonbeam brings Ethereum compatibility, Astar enables multi-chain dApps, Acala powers DeFi, and dozens more projects are building unique solutions on Polkadot. DOT isn't just a token, it's the lifeblood of the network. It's used for governance, staking, and bonding, directly tying its value to the health and growth of the entire Polkadot ecosystem. As more parachains launch and more DOT is locked up for auctions and staking, demand for DOT rises while available supply tightens, creating a powerful economic flywheel. Polkadot is betting big on a multi-chain future, aiming to become the communication protocol, the TCP/IP of Web3, connecting blockchains just like the internet connects computers. By 2026, as blockchain specialization accelerates, Polkadot could be the essential glue holding this new decentralized world together, enabling collaboration at a scale never seen before. DOT could emerge as a core asset for the next phase of crypto, standing alongside Bitcoin and Ethereum as a pillar of the new Internet of Value. Now let's turn to our final pick and see what the future might hold. Our final pick isn't a blockchain itself, but rather the crucial middleware that makes blockchains truly useful, Chainlink, along with its link token. While blockchains are powerful, they're like isolated islands without a way to interact with the outside world. Chainlink is the technology that builds the bridge between these islands and the vast ocean of real-world data. Blockchains can't access real-world data on their own. This is known as the Oracle problem. Without a secure way to bring in external information, smart contracts are limited in what they can do. Chainlink solves this by acting as a trusted gateway, connecting blockchains to everything from financial markets to weather data. Chainlink is a decentralized network of independent nodes that fetch, verify, and deliver data to smart contracts. These nodes provide reliable feeds for prices, weather, sports scores, and much more, ensuring that smart contracts can react to real-world events with accuracy and security. Chainlink has become the industry standard for decentralized oracles. Most of the top DeFi projects rely on it for their data needs. Its network effect is massive, with more integrations and partnerships than any other Oracle solution. As more projects adopt Chainlink, the network becomes even more secure and reliable, which in turn attracts further adoption. This positive feedback loop strengthens Chainlink's position at the heart of the blockchain ecosystem. But Chainlink isn't just about price feeds. Chainlink VRF delivers provable randomness for blockchain games and NFTs, ensuring fairness and transparency. Chainlink automation allows smart contracts to be triggered by real-world events, opening up new possibilities for decentralized applications. The Cross-Chain Interoperability Protocol, or CCIP, enables apps to send messages and tokens across different blockchains. This makes Chainlink the backbone for cross-chain communication, helping to unify the fragmented blockchain landscape. With link staking, holders can now help secure the network and earn rewards. This not only incentivizes participation, but also adds a new layer of security and demand for the link token itself. As real-world assets like real estate, stocks, and even commodities move on-chain, secure and reliable data feeds become absolutely essential. Chainlink is the infrastructure making this new era of tokenized assets possible, ensuring trust and transparency. By 2026, as Web3 matures and the integration of real-world data accelerates, the demand for Chainlink services could skyrocket. The more the world connects to blockchains, the more vital Chainlink becomes. Investing in Link isn't just a bet on one blockchain, it's a bet on the growth of the entire smart contract economy, across every chain and every industry that will use decentralized data. Chainlink's dominance is only growing, and its role as the connective tissue of the blockchain world is becoming more apparent every day. If you believe in a future where blockchains are seamlessly connected to real-world data and where decentralized applications can truly transform industries, then Link is a must-watch project for the years ahead. There you have it, 5 altcoins with huge potential heading into 2026 and beyond. From Ethereum's foundation to Cardano's rigor, Solana's speed, Polkadot's interoperability, and Chainlink's data services, each tackles a key piece of the Web3 puzzle. Remember, potential comes with risk. Crypto is volatile, so do your own research. Use this as a launchpad, read white papers, join communities, and dig deep. The best investors are the most informed. Stay curious, stay skeptical, and keep learning. If you found this helpful, hit subscribe for more crypto insights. See you in the next video. Want to find the next 100x crypto gem for less than $1? Today, I'll reveal 4 altcoins under $1 that could change your financial future. These aren't just cheap coins, they're backed by real technology, major partnerships, and explosive potential. I've done the research so you don't have to. We'll break down what makes each project unique, why they're undervalued, and why this dip could be your last chance to buy in cheap. This isn't just another list. This is your blueprint for spotting undervalued assets. And if you stick around to the end, I've got a bonus pick that's even more under the radar. Grab a notebook and get ready. We're diving into 4 altcoins under $1 that could make you a fortune. Let's get started. First up is VeChain, VET, a project revolutionizing global supply chains. VeChain uses blockchain and smart chips to track products from creation to consumer, fighting counterfeits in luxury goods, food, and pharmaceuticals. It's already working with giants like Walmart China, BMW, and H&M. The VeChain Thor blockchain uses a 2-token system, VET and VTHO. Hold VET, and you generate VTHO for transaction fees. The team is led by Sunny Liu, former CIO of Louis Vuitton China, and stacked with enterprise veterans. VeChain isn't just a crypto project, it's solving trillion-dollar problems. Despite all this, VET is still under $1. Every product scanned is a transaction on VeChain Thor. Imagine the scale as more companies join. VeChain is also tackling carbon tracking, helping companies manage their environmental impact. Scan a QR code and see a product's entire journey. This transparency builds trust. VeChain is a key player in anti-counterfeiting and sustainability. Buying VET under $1 is like buying Amazon in the 90s, a rare opportunity. As adoption grows, so will the demand for VET and VTHO. VeChain is a sleeping giant. Don't sleep on this one. Let's move to the next gem. Next up is Stellar, XLM, a veteran project with a mission to make money move as easily as email. Sending money across borders is slow and expensive. Stellar fixes this with near-instant ultra-cheap transactions. The Stellar network settles payments in seconds for a fraction of a cent, revolutionizing global finance. Stellar's goal is financial inclusion, connecting the world's financial systems so anyone can access low-cost services. Billions of unbanked people can now save, send, and receive money with just a phone. But this isn't just a charity. Stellar has major partnerships including IBM and MoneyGram. IBM WorldWire uses Stellar for real-time cross-border payments, directly competing with legacy banking. MoneyGram lets users convert cash to digital assets on Stellar, bridging the gap between cash and crypto. This is live and operational, not just a future plan. Stellar uses the Stellar Consensus Protocol, fast, scalable, and energy efficient. It's built for high-volume, low-cost transactions, perfect for remittances and micropayments. XLM is still under $1 because Stellar isn't flashy. It's the essential infrastructure powering the future of finance. The network allows anyone to create digital assets, making it ideal for stablecoins and tokenizing real-world assets. USDC, a major stablecoin, is live on Stellar, a huge vote of confidence. The remittance market alone is worth hundreds of billions. If Stellar captures even a small share, XLM demand will skyrocket. XLM is used for transaction fees and as a bridge currency, giving it real utility. The Stellar Development Foundation is investing in new projects, growing a vibrant ecosystem. They're playing the long game, building a robust, sustainable network. As regulation becomes clearer, compliant projects like Stellar will be the biggest winners. Stellar is building bridges, not burning them. XLM is a bet on a faster, cheaper, more inclusive global financial system. The fundamentals are strong, and the partnerships are real. The opportunity to buy XLM under $1 won't last forever. If you want exposure to the future of payments, Stellar is a top pick. It's a quiet giant, ready for a comeback. Don't overlook this essential piece of crypto infrastructure. XLM is a smart, long-term play. Let's check out our next altcoin. Ready for something even faster? Third on our list is Harmony. 1. The blockchain for those who love Ethereum's potential but hate its high fees and slow speeds. Harmony is built for speed, scalability, and low cost, using sharding to process transactions in parallel. Think of it as adding more lanes to